Fellas, you know Degree Cool Rush deodorant, right? Well, last year they changed the formula, and guys were mad about it. One dude even started a petition. So guess what? Degree heard us, admitted they messed up, and brought the original Cool Rush scent back exactly how it was. And it's in Walmart, Target, and other stores now for under $4. So grab some and remember why its cool, crisp, and fresh scent made it the #1 men's antiperspirant for the last decade. Degree Cool Rush is back, and it smells like victory for all of us.
Reality radio for a really great future. We're talking real money.
Hey, welcome to Talking Real Money, the real money talking show, where we talk about money that's real and really talk about it. I'm Don McDonald, confused as ever, joined by the never confused Thomas Charles Cock.
That would be far from the truth, as you know.
Okay, you're right. I was
Much
trying to give him more credit than he deserves.
I think
as
that
is
would be
my
true.
as is my job. Trying to make him feel better because he sounded
by the way,
sounded exasperated when the hour started.
Well, I want to point something out here before we go, which is a very important topic in just a moment.
Sure.
Literally, 90% of the people that I talk to from the show or the podcast, the first thing they say to me, it happened again this morning.
No, what? Be nice to Don.
I laugh at your jokes.
Really?
Literally 90%.
Really?
They feel bad because you don't laugh at them and you give me a bad time about them.
They don't.
So this whole aspect
really?
of you making me feel better is not true.
Oh.
Yeah,
You're right.
it's literally 90%.
You caught me. I lied. I lied. I don't care. Don't give a damn. I don't give a damn. I don't care.
All right. Well,
All right.
We'll just leave that as it may.
All right.
So here's one thing we do know.
What?
Actually,
we don't.
It's pretty shocking.
We do.
Yeah, it's pretty shocking. It's about 25% of Americans, as they get close to retirement, have no retirement savings. If you look bigger picture, it's about half of America that doesn't save anything. But it's like 25% that get close to retirement have no savings. It's kind of shocking. And we know because we talk to so many of you that it's hard to get started sometimes. How much percent and where do I go? That's a problem, right?
Well, because and we've talked about this before. We're going to talk about it again, over and over and over again. The time to get started is as early as possible. The longer you wait, the more it hurts, the more it is going to hurt to invest to get the kind of money you're going to need to retire comfortably. A couple of things are stacked against us. One, we're living a long time as human beings. We're living, on average, more than a decade longer than our grandparents or great-grandparents did.
That's about right, yeah.
More than a decade. So you're going to be in retirement a long time, and then, oops, almost no one has a pension anymore. And those who do have pensions need to be a little concerned about some of the pensions and how much they're going to pay. Social Security is not going to support you. So these facts say you have to take a portion of your pay and put it away for a rainy day. Hey.
And that can be
very
hard.
Poetic, wasn't it?
Yeah, I should be kinder to that terrific
the little
soliloquy
ditty
there. So, I mean, yeah, so here's the thing.
See, he does the same thing to me.
That's true, I do. I guess you're right.
People.
Turnabout is
It's just
fair
I
play.
never see anyone in person because I'm not allowed to leave my cave.
Yeah, your office is locked from the outside.
I'm like the guy. What was the
fair.
saint who wrote Revelation? I'm like him. He just was stuck in a cave, so all he thought about was horrible stuff.
Yeah,
the Bible,
and
Revelations.
There's a lot of horrible stuff to think about. But
my only Bible reference for the show.
There are easier ways intellectually to view this, right?
There are, and thank you. You got me to the point.
Yeah. How about that?
There was a study done recently, and this was reported in at MarketWatch, trying to figure out how to best convince people to put away a portion of their income. Now, we always say, try to save 10 to 15% of your income in a 401k or 403 or IRA or Roth or whatever it might be every single paycheck. But it's interesting. Our brains are, while they're our best feature in many cases, I know in my case it is, they play games with us. Our brains are they're con artists. They're tricksters. They're little jokesters. Our brains do not like percentages. It's like we look at that and go, it's math. I don't know. 15% sounds like a lot. I don't think I can do that. But we also look at numbers differently depending on how they're stated. Let's say you had 15 cents in your pocket, and you pulled out, you had a big wad of change in your pocket, and 15 cents fell and bounced into a little crevice that you're going to have to dig it out of. It's 15 cents. What would you do? Nothing. Look at your investments as cents, not percentages. I'm going to invest 15 cents out of every dollar I make. Well, that's not much. It's just 15 cents or 10 cents or whatever that is. Make it easier to invest.
Tom and Don are talking real money.
Is your portfolio a mess? You may have a case of hodgepodgeitis, but don't worry, we can help. Just set up a free, no-obligation meeting with a Vestory advisor at Vestory.com. No sales pitch, guaranteed. That's Vestory.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Hey there, hi there, welcome back there to the show. I'm Don, Tom's over there, you're out there, and there's an easy way, it's so easy, for you to actually be here with us at the same time. Because remember, Tom and I are not in the same room. It may sound like we're in the same room, but you can be as much in the same room and maybe even more in the same room, because you're a lot closer to Tom than I am probably, by calling us at 855-935-TALKS. Or you could just drive over to Tom's house. 855-935-8255. You're at your house. They can stop by.
I'm in the window. Yeah,
they can look at it
waiting
and see
out
ya.
there.
Do you ever get a crowd forming outside the window? Your
the
fans?
Only people that have ever actually driven by my wife's food truck, which I'm not going to mention. Well, Pompeii Wood-Fired Pizza. At one time, somehow Google had the address as our home address, and there were people that used to drive by thinking they could buy a pizza.
But they didn't.
I can remember people like
they didn't come because you were on the radio.
No, they're like, no, they didn't come because I was on the radio. I don't give out my home address. People feel obligated.
If you look up Pompeii Wood-Fired Pizza, you could probably find it.
Probably figure it out.
All right,
it'd be hard.
I got to tell you, it's so easy to find out where people live nowadays.
Oh yeah,
there's like 10,000 things online. You just pull it up and you go, oh, well, that's their house. It's a stalker's paradise out there.
And I think was it just a week ago that I was randomly walking through Celebration and I found your house, which I don't think I told you that. I think it's over there somewhere.
You were not randomly walking.
It was kind of that way. We were kind of like walking, and I was like, I think it's over there, but let's call Debbie to make sure we're on the right path. And she said, yeah, you're very close. Boom.
Okay. You were here, but you make it sound like you just left your house in Seattle and wandered into Celebration, Florida. You actually flew here and were staying in a hotel in Celebration, Florida.
I'm one of the lucky souls that actually got out of town on Alaska Airlines. So
yeah, hardly got back, though.
That's true. No, that was Delta.
That was Delta. Yeah, because your Alaska flight was canceled. 855-935-TALK. Call us like Paul did. Paul waited so long, and we really appreciate that. Hi, Paul. Yeah. Welcome to the show.
Hello. Thank you. I just wanted to thank you guys. I've been binging you, and it's definitely a thank you, but also not so much because my bliss has been destroyed. You guys have educated me on fees in my retirement.
Ruined your bliss.
Yeah.
Yes. And prior, I thought everything was going well. But since then, I've kind of delved into it, and I have 20% are in C shares, and I'm getting crushed by like over 2.3% of fees, and those are the only fees, and those are the fees I know of. So, and
is this the
person I was dealing with?
Hey, Paul, I think it's probably time to sell. You ready? You ready for this one? This is a really good one. This is a dad joke. You need to. I think it's about time for you to go sell your C shares by the seashore.
And with the he's been waiting for that one all day. Paul.
All year. I've been waiting for years for that one.
So wait, is this is not in a retirement plan, is it? Like an employer-sponsored plan?
It's within. Yes, it's a component within my 403B.
Oh,
What?
my.
No, they shouldn't have
Yes,
C shares
they
in there.
can. They can.
That's outrageous.
I got to
Okay,
tell
how
you,
big
though,
is
but
the company?
that is on the brink of illegality. That is so close
That really
to
is.
illegal.
That's awful. Is this a small company you work for?
No, it's a 403, so it's a government or a school or a hospital.
Oh, good point. That's outrageous.
Right, but it wasn't one of the school funded, one of the school sponsored one. It was an outside one because of a friend back in 04 that I went in with.
Oh, this is a
because
friend.
I didn't start till then. And it's within the American funds under Capital Group.
Yeah, I know them.
Yeah,
I know
we
them
know
well.
them,
And here's how much money do you have in this 403B? I'm going to destroy your bliss even more. How much money in total do you have?
Well, if you're going to destroy it, I'm not saying. No,
roughly
about 640.
Okay.
Wait.
You ready?
Dollars or
no,
thousands of
thousands, Tom, not $640. Hold on.
No,
wait. Shh. Wait.
I've
is
done
this
the
still-
math too, so actually, you want
well,
to
but no.
destroy it
There's
more
to
than
this.
I am.
There's more to this than you want. I don't want to ruin a friendship, but I think I'm going to, because your friend, and I'm holding up my fingers in little air quote things, with the American Funds Group, they're not a terrible group. With the amount of money you put in, he could have gotten you what are called break points on A shares. So instead of selling you what he claimed was a no commission C share, he could have literally sold you A shares with no commission, no load whatsoever, and annual fees that would have been between 0.6 and 0.9% a year.
which is still high as far as we're
Still
concerned.
high, but this person did you a horrible disservice. Horrible, and for themselves, made a heck of a lot of money.
All right, it's the fees around $15,000 a year. But what is your question here? We didn't let you get to that.
No, that's okay. And to be fair, the friend is also in this with me. He wasn't the agent that I went through. He was a peer.
Okay.
He
That's
said,
good.
"Go with this guy. He's been good to me." But the more I find out, the more he's just smiling, and now I know why he's smiling.
They're all nice, Paul. They're all such nice people.
Yeah.
They're so nice.
So to get to my question is, I've been asking actually to tell him I want out of the C shares when I first found out about them, and it's very, very slow. But now I actually want out of everything and try to get into lower fund ETF or anything like that. But I'm not. I don't know how to go about it or the best way to switch out. And would I be getting crushed with fees if I switch out of this and roll it over into another either?
No, as a matter of fact, you're going to feel a weight lift off of your wallet. You're going to feel lighter than air once you get out of this, because your fees, if you get into ETFs or even just really good no-load index mutual funds, your fees are going to go from 2% to 0.1%.
I was going to say 0.2
or 0.2.
But if are you still working?
It's okay.
At
He can move though, Tom. He can move. Go to the personnel, the human resources people at the school district, okay? And ask them for this. This is exactly what you must ask for. Ask for a list of all approved investments for the 403B plan. You'll find that the people who don't sell, like a Fidelity or a Vanguard or Schwab or whomever, they may be on your list. They just don't call you. They don't call your friend and say, "Hey, I'm a nice guy. Let me help you out." I would suggest to you, even Paul, if you really want to get spunky, that you write a letter and get copies of your statements and send it to the U.S. Department of Labor, because this is the kind of thing that they've been trying to stop in retirement plans. But at least find out who your approved vendors are and find somebody new. Call us with that list.
Tom and Don are talking real money.
Is your portfolio a mess? You may have a case of hodgepodgeitis, but don't worry, we can help. Just set up a free, no-obligation meeting with a Vestory advisor at Vestory.com. No sales pitch, guaranteed. That's Vestory.com.
For your real life and real future, Tom and Don are talking real money.
I went to check with the American funds. Now, I want to explain something before we go to our next caller. The broker sold mutual fund industry they used to have just one commission. And that commission was generally, back in the old days, 8.75%. That's what it used to be.
The good old days, Don, yes.
Those funds are now gone. The highest commission generally charged on an A share, and they have different classes of shares. There's A shares, B shares, and C shares. A shares have the lowest annual fee, but they have a commission up front. That commission at American funds starts at 5.75%, goes down to 5% at $25,000, 4.5% at $50,000, 3.5% at $100,000, 2.5% at $250,000, 2% at $500,000, and is zero at $1 million or above, which means you're only paying the annual fees. B shares, though, you don't pay a commission up front. You pay a higher annual fee, and you have a contingent deferred sales charge at the end, which means if you get out early, you pay the commission. C shares have no contingent deferred sales charge at the end. You can get in day 1, get out day 2, but they charge much higher annual fees to pay the broker the 5% commission that they would have gotten with the A shares. Now, an honorable broker, one who is honest and doing at least a decent job, would never, as a matter of fact, it's illegal to not use breakpoint funds, but nobody ever gets caught. So I would not only refer this person to the Department of Labor, I would also refer them to the Securities and Exchange Commission, because this is a flagrant violation of Reg BI, best interest. It is a flagrant violation of Reg BI. They should be reported. Absolutely reported. No doubt about it, reported. I am furious. Can you tell how angry I am? These people are evil, and they smile as they rip you off. Whoever you are a horrible human being, and you are deep down inside, but you justify it because, well, it did get me this nice Lexus and this beautiful house on Queen Anne Hill.
I was thinking, actually, the boating season is coming. I could use something a little bigger this year.
Nice big boat. Yeah, go sell some C shares. You'll be fine.
Yeah, that's outrageous.
935 Talk.
Truly.
Tom, let's go to the phone.
Truly.
Lisa,
okay.
Welcome.
Hi, thank you very much. Good afternoon. I hope I have what's a really simple, easy question, and that you can put it in layman's terms for me. I've got less than $1,000 in an HSA pre-tax account that is not doing me any good, and I want to get it out of there. So what should I do with it?
So is this in an employer plan where you're still working?
No, the employer has dissolved.
Okay.
So that money could be moved into a retirement type account, like an IRA.
Through your HSA or through another person who provides HSA services.
Correct.
But it's not going to... I'm trying to think of who would take $1,000 HSA and actually do decent funds with it, though. That's where I would try
some of the major custodians. I'd call Fidelity. I don't know. They might do it. I don't know who does that. That's a good point. But the point of the matter is, if you don't have medical expenses for that money could be moved into a retirement type account, invested for your retirement, and help you in the future.
Yeah. Okay. You can move your HSA to Fidelity. Just checked. And what you could do with Fidelity is just as simple as, and this is probably the most simple thing to do, is just get a target date fund based on your retirement date. Something like that.
And by the way, to get started with that, I would just call Fidelity. Say, here's my situation. Can you help me get that moved? They've got people there that will do that.
Oh, this is a problem.
Hopefully they answer more quickly than Alaska Airlines.
No, that's not a problem. There are no fees for balances under $10,000. Yeah. That's good.
Shouldn't be.
Zero fees. I just want to check. Looks like Fidelity's going to be a good spot. I would consider them. And as a matter of fact, Morningstar named them the best HSA provider.
Well, they're huge in the retirement industry. So I think that. So again, Lisa, I just go online, type in Fidelity, figure it. I mean, it wouldn't be hard to figure it out.
Type in Fidelity HSA. I just went right to it.
And was that helpful?
Good luck. Thanks for the call. We got to take a break. 855-935-TALK is our number, 855-935-8255. Give us a holler. We'll try to make your financial life better and make life worse for those people who are ripping you off.
Don are talking real money.
At some point, most investors need professional financial guidance. So get a little bit of free help or a lifetime of affordable 100% fiduciary guidance at vestory.com, vestory.com.
Reality radio for a really great future. We're talking real money.
Oh, please help me. Just please help me. The world is one giant pseudo scam, or maybe just even real scam. I mean, come on. We got the C-share guy.
I would love to know. I would seriously love to know if you went to the broker that put someone in those C-shares in their retirement account.
When they could have used A shares.
See if they defend it one way or another.
They can't defend. It's indefensible.
I think they would say something like, "Well, yeah, but there would be a yeah, but."
No, it was to make us. C shares were incredited. Were incredited.
Yes,
were created to make sales.
Yeah, I know that.
That's the only purpose.
But I'm just saying that they would say they would probably say that's a no load fund.
Oh my God!
Put them in a no load fund. That's probably.
As a matter of fact, I would just challenge them. Go ahead and put that in writing, would you please? Please tell me that the American Fund C shares you sold are a no load fund, and put that in writing, because the minute they put it to paper, they have violated the law.
Yeah, because it's
illegal. It is illegal to call a B or C share fund a fund with a 12B1 fee of over. This is a little enlightenment for everyone. Any fund with a 12B1 fee of over 0.25% per year cannot, by law, be called a no-load fund.
But whose law?
The Securities and Exchange Commission.
Oh, they've actually said that.
Yes, they've actually said that.
It.
They don't enforce diddly because they don't have they don't have enough people to. I mean, with all the flipping criminals on Wall Street, they don't have time. Anybody watch TV lately? We work, we crash. We
super pump,
we invent Anna, we drop out of school.
What about bad vegan? Come on. Man.
We got the bad vegan. It's like the world is all scams all the time.
Yeah, there is a lot of that on television.
I feel like we're the only breath of sanity and honesty in the world.
But let's keep breathing.
I'm going to. Brian, welcome to Talking Real Money.
Hey, Don and Tom, thank you so much for teaching us and making us laugh 7 days a week. I'm a regular caller and listener at this point. Appreciate you guys.
Thank you so much.
Thank you.
Yeah,
what's
big deal, y'all. Yeah, I own AVEM, which I think, to my understanding, is a large blend emerging markets ETF. But I understand that
it is. That's run by Avantis. Yeah.
Yes, sir. And I think they just released something called AVES. Is that a large value emerging markets ETF? Or small value?
Hold on.
Oh, now you're going to make us look bad because we don't know the answer.
Yes,
that
is an emerging markets value ETF.
Okay, so I'm just wondering. Yeah, it's a fine-tuning question, I guess. I mean, I think
I may get that fund. I didn't even know that existed.
Here is your question: should I own that instead of the AVEM?
It is, or should I go 50-50?
Yeah. I probably would go 50-50. Remember, the AVE, that's a riskier fund.
Yep.
As I jokingly say, these are lousy companies in countries, which is not true. They're not countries. They're riskier countries. So I'd probably split it. And so then you have sort of a growth value blend between those two funds.
That's kind of
it makes the portfolio more ponderous. Yeah, it makes it more ponderous. The interesting
management's difficult too.
Yeah, that is really fascinating. So I'm just looking at the split between growth and value, and they are. I just want to go back and make sure. That's interesting. The value tilt on AVES, you know what? I wouldn't even bother. Because the AVEM has a value tilt already.
It does.
AVES is just a slightly greater value tilt. Slightly. And I do mean ever so slightly, that I don't think I'd have both. If you want to lean them, you're going to have almost the same portfolio anyway. Just go, if you want more value, just go with AVES because, wow, I'm looking at the chart and going, that is just very, very little difference. I mean, I don't have the exact.
AVES is going to be probably a little more expensive.
Yeah. It's 0.36 to 0.33.
Yeah, so slightly, a little more value.
And it's
so,
a little,
I mean, again,
it's a little smaller. It's a little more value.
Yeah.
Really, they kind of took out Taiwan Semiconductor, and other than that, it's a similar fund. Yeah, I don't know. Okay,
which the Chinese may do anyway.
Thanks
so
for calling. Yeah, you're right. 855-935-TALK.
Are talking real money.
Is your portfolio a mess? You may have a case of hodgepodgeitis, but don't worry, we can help. Just set up a free, no-obligation meeting with a Vestory advisor at Vestory.com. No sales pitch, guaranteed. That's Vestory.com.
Your guides to a really great financial future. Tom and Don are talking real money.
You see, this is where an advisor can help because there are lots of little tiny points that you need to analyze to try to pick a fund that's likely to fit better within the factors that we believe in. And the difference between AVES and AVEM, the Avantis Emerging Markets funds, in terms of their value tilt, they're so close. Little smaller companies in AVES, but a little more digging shows me that AVEM, the regular emerging markets fund, has 3,200 stocks in it.
Yes.
The AVES has about 1,300 stocks in it.
So you get more diversification. You get a little less of a value. Remember,
less, but not much.
Yeah, I mean,
less.
there's a lot of work that showed that value has made still even more in emerging markets. So, but all things being equal, again, as your advisor, I would just use the AVEM.
Yeah, because of the added diversification, because really one of the things that makes a big difference in perceived volatility for investors, and that's what keeps you invested, is diversification. It can dampen the longer term bouncing, not the short term bouncing. You're still going to get a lot of that in an individual fund. But it can reduce it over long periods of time. So let's go back to those phones at 855-935-TALK. And Dave, you are next.
Hi, Dave.
Hi, guys. Well, I really enjoy your show. So here's the situation. I am in the process of writing a revocable living trust. I'm 76 years old, so I have to look at a successor trustee. So I go into my local bank and tell them that. And I said, oh, by the way, I have some investments in both Fidelity and Vanguard. And if you take over this trust, can I continue to have those facilities with in Vanguard? And will you manage those? Oh, no, we have to bring all of the assets into our trust, our trust department, and then we will manage your assets for you, meaning they'll buy their stocks and bonds and so on and so forth, which, as you very well know, and I know, the return is ridiculous. So my question is, I don't necessarily want to go to that bank for my trust department, but I'm looking for a successor trustee. Can you give me some avenues that I can look at for successor trustees?
Yeah, the problem I always see in this issue is the cost. Because we looked at the field not long ago because someone else, one of our clients wanted one, and we looked around and boy, they range as high as like 1 to 1.5% a year. And I always think, is that something you really need? And so, I don't have a great answer. I mean, we ended up in the case of, I think, of our client finding, I think it was a family member or something.
That's the most common answer, by the way. It is usually a family member of some kind that agrees to act as a trustee. And
How
big is the trust? Just out of curiosity. It's
going to be somewhere around $13 million, and a family member just doesn't. That's not an option.
Yeah, that you get to that level, then I'd say, yeah, you do need. But there again, is it a matter of the money management and record keeping and a tax return? Is that what we're talking about?
Yeah, because I would like my business to continue. For example, I own and manage real estate. I'd like to take a couple of those units and say, okay, I want those to be put in a management company so that when my grandkids go to college, which one is about 8 or 9 years from now and the other is about 10 to 12 years before they go to college, then I would want them to be able to have the beneficiary of maybe those two buildings. And at 21, they could get 20%, and at 30, they could get another 20%, and so on. But that's 40 years down the road.
Mm-hmm.
It's a hard question.
It is really hard. I assume you have a good attorney setting this trust up for you, right?
Yes, I am. Setting it up through Anderson Advisors, and I laugh when I say this, in Las Vegas, but they are a great firm.
Well, they could handle the $13 million in about an afternoon.
What I would probably do is, for example, I know of a bank in Central Florida that has a trust department, and their brokerage firm that is not a brokerage firm; it is a true investment advisory firm, and it's a dimensional funds approved advisor, which means they would use no load, low cost products. I would either ask your lawyer if they have any banks that they know of that don't have their own brokerage firm. You don't want a bank with a brokerage firm in-house, but very few banks have a fiduciary advisory firm, but a few do. A few do. And I'm trying to remember the name of that bank in Florida that did this. They were also associated with a big real estate firm, but I'm going to try and find that. If I find that, I'll mention it on the show on a Saturday. But I would call some banks and say, do you allow outside investments in your trust? Because you're going to pay a trustee 1.5% a year to manage. It's ridiculous what they get because they don't do much. They just sort of stare at the money.
Nope.
Oh man. Yeah, most bank trust departments.
I wish I had some better
They're
ideas.
going to throw you to their brokers, and their brokers are generally speaking the worst brokers in the world. And you think there's some? I know there are a lot of bad ones out there, but some of the worst brokers in the world reside in banks. They work for banks. So
thank you for your kind comment about the show.
I've known several of them, and they're really terrible, terrible brokers. Terrible. Let's see, Cindy, you're up next. Welcome to Talking Real Money.
Hi, thanks for taking my call. So I'm thinking about doing a conversion from my rollover IRA to a Roth IRA, and I'm wondering if I do that now, do I have to pay estimated taxes on it now, or are they due at the end of the year, or should I wait to the end of the year to do the conversion?
How big is the conversion?
$50,000.
And how big is your income without the conversion?
About 80,000.
Roughly.
So it's gonna kick you up a little bit.
Yeah, I mean, the problem you run into is if you substantially underpay what you owe, the IRS is going to want you to not only pay what you owe, they may throw a penalty on top of it because they.
However, did you get
the first time?
Did you? I was just going to say, did you get a refund? Are you getting a refund this year?
No.
You paid taxes this year?
Yes.
Did you have income that yeah, so you really should pay the estimated tax on that amount.
Sense.
Yeah. You really
because
should.
Again, sometimes the first time around they kind of wink
they
and
cut
say
you
it's
some
okay.
slack
and then after that
you do it after that they
unhappy.
say you must file quarterlies and if you don't then we'll hit you
estimated and
we'll
get
hit
on
you with a
it.
penalty. I would pay the estimated before the end of the year.
Tom and Don are talking real money.
A second opinion could save your life either physically or fiscally. Let one of our Vestory advisors help you save your future at vestory.com, VESTORY.com.
For your real life and real future, Tom and Don are talking real money.
He's coming out of his cave. He's coming to the Northwest. And if you're like me, you've missed seeing Don McDonald in person. You got an opportunity to see Don.
Good thing they're not like
Paul
you.
Merriman, Herb. Well, that's good for the world. Lots of great speakers, terrific information. Come out and join us in person in Bellevue, May 14th for Retire Meet. I think it's like the 8th year or something. And it's sold out every year. So get your tickets now. Don't wait around. It's going to be a great event, and you'll learn a lot and you'll have fun. How's that? RetireMeet.com.
He's guaranteeing that, apparently.
Before.
Yeah. Retire MEET or retiremeat.com.
We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future, so past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial product or securities. Instead, the program is provided as a public service by Appella Capital, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. Are we done now?